Most people on Medicare pay $202.90 a month for Part B. Some pay $486.80 more on top of that, every single month, based on income they no longer earn. The income is gone. The surcharge keeps running, and the agency collecting it has no obligation to tell you that a one-page form can turn it off. That form exists. The fix is available right now. And if you were born before 1958, the income event that triggered your surcharge almost certainly happened before you fully understood the rule. You are paying for a year that is over, for a salary that ended the day you retired. The Medicare statement deducts the amount from your Social Security check before it hits your bank account and waits for you to ask why. Most people never ask, because nobody told them there was a form. IRMAA. In plain terms, that is an extra charge added to your Medicare bill every single month when your income from 2 years ago exceeded a threshold. The surcharge in 2026 ranges from $95.70 to $578 per month on top of your standard Part B and Part D premiums. Most people paying it have no idea the appeal process exists. The form is free, takes 20 minutes to complete, and can eliminate a surcharge worth up to $5,844 per person per year. 3 triggers that produce the wrong premium, 1 form that corrects it, and the exact words to say when you call. Before we go further, I want to address 4 reasons you might think this does not apply to you. All 4 are wrong. First, my income is not that high. The IRMAA threshold in 2026 is $109,000 for a single filer. That is your modified adjusted gross income, which includes Social Security, pension distributions, IRA withdrawals, and the year you sold the house or received a one-time retirement payout. Many retirees who think of themselves as middle income crossed that line during a transition year and have been paying a premium surcharge ever since without knowing what caused it. Second, my financial advisor handles this. Your advisor may not have filed this appeal. Form SSA-44 is described by Medicare planning specialists as one of the most underutilized correction tools in the system. Many advisors skip it because they either do not know it exists or assume it will not be approved. The approval rate for legitimate qualifying events is high. One missing conversation costs up to $5,844 per year per person, or nearly double for a couple where both spouses are on Medicare. Third, I got a letter explaining my premium. You received a bill with the income figure used to calculate it. That letter does not include a section explaining that a separate form can reduce the amount based on current income. The SSA sends the bill. The appeal is entirely on you. Fourth, it is too late. It is not too late for this year's surcharge. For life-changing event appeals using Form SSA-44, you can file any time while still in the affected benefit year. If your income has dropped, filing now stops the billing going forward. If you are not subscribed yet, do that right now and turn on the bell. Medicare surcharge thresholds, appeal rules, and correction deadlines shift every year. Nobody in the system sends a personal explanation of what changed for your specific premium. That is exactly what this channel does. Subscribe, and let's get into it. The information in this video is for educational purposes only and should not be considered financial, tax, legal, or investment advice. Consult a qualified professional for your specific situation. Here is the number that tells you the scale of what we are dealing with. According to the Medicare Trustees Report submitted to Congress by the Centers for Medicare and Medicaid Services, 5.1 million Medicare beneficiaries paid Part B IRMAA surcharges in 2025, roughly 7 to 8% of all 69 million enrollees. 5.1 million people paying up to $5,844 per year each, many of them based on income that no longer exists. Form SSA-44, the appeal form that can eliminate or reduce that surcharge when income has dropped, is called one of the most underutilized tools in the system by Medicare planning analysts. The surcharge keeps running because nobody with a financial interest in stopping it ever put the form in front of the people paying it. Now here is exactly what is happening inside your Medicare bill and why it may be calculated on the wrong year. IRMAA stands for Income-Related Monthly Adjustment Amount. Your 2026 Medicare premium is based on your 2024 tax return, not what you earn now. 2 years ago, the Social Security Administration pulls that number from the IRS directly. You never get asked whether the income is still accurate. The bill arrives, gets deducted from your Social Security check, and runs all year. In 2026, the first IRMAA tier starts for single filers at $109,000 in modified adjusted gross income. $1 over that line adds $81.20 to your Part B premium and $14.50 to your Part D surcharge every month. That is $1,148 for the full year, triggered by a single dollar. IRMAA is built as a cliff, not a slope. Cross any tier boundary by even $1 and you owe the full surcharge for that entire tier for the full year. No phase-in, no gradual increase. The same cliff structure applies at every bracket, all the way to $487 per month added at the top tier. Here is the fix the surcharge letter never includes. A qualifying life-changing event, retirement, death of a spouse, divorce, reduction in work hours, or loss of income-producing property, allows you to request that SSA use your current income instead of the 2-year-old figure. The form is SSA 44, titled Medicare Income-Related Monthly Adjustment Amount Life-Changing Event. It is free, available at ssa.gov right now, and can stop a surcharge billing you for income you no longer have. Now let's talk specifically about which situations trigger the wrong premium. And subscribe right now so you never miss these Medicare updates, because what comes next is what most people paying a surcharge never trace back to the exact year that caused it. The first trigger is the retirement transition year. If you retired in 2023 or 2024, your final working year's return included a full salary, possibly a bonus or lump sum payout. That return is what Medicare used to set your 2026 premium. You are living on Social Security and savings now. You are paying a surcharge calculated as if you still have a paycheck. The paycheck is gone. The surcharge is not. The second trigger hits people born between 1951 and 1959 particularly hard. The required minimum distribution. Under the Secure 2.0 Act, if you were born in that range, you must begin taking distributions from your traditional IRA or 401k at age 73. Those distributions count as ordinary taxable income and count toward your Medicare MAGI. A retiree sitting on $1.2 million in a traditional IRA taking her first required distribution at 73 may pull more than $44,000 into her taxable income in a single year, enough to cross into the second IRMAA tier and produce a larger Medicare bill 2 years later. Nobody in either process connected the two for her. The third trigger is the one-time income spike, a property sale, a business buyout, a deferred compensation settlement. Income that appeared on one return and will never appear again. Medicare locked it into the 2-year look-back, and the surcharge has been running every month since the transaction closed. Diane is 71, a retired teacher in Tulsa. She sold the family home in 2024 to move closer to her daughter. The capital gain added $140,000 to her return. A single transaction, never recurring. Her 2026 Part B premium is $446.10 instead of $202.90. That is $243.20 extra per month, $2,918.40 per year on income that will not appear on another return. The surcharge continues. The form to stop it has never been placed in front of her. If you have stayed with me this far, you are already ahead of most people in this situation. The next section determines whether the appeal actually works, and it is the one almost nobody reaches. There is one group for whom this problem arrives with particular force. Write this down if you are widowed. When you filed jointly, your household income was measured against the joint IRMAA threshold of $218,000. The year your spouse died, your filing status became single. Your threshold dropped to $109,000, cut in half. The same income that never triggered a surcharge under joint filing can now push you into Tier 1 or Tier 2 simply because you file alone. Your income did not go up, your protected threshold went down. And the 2-year look-back means the surcharge arrives after the loss, when grief is present and Medicare paperwork is the last priority. Joyce is 69, retired from the Idaho Department of Labor in Boise. Her husband passed away in 2024. Their combined retirement income, his pension, her Social Security, joint savings interest, stayed under $218,000 when they filed jointly. After his death, her 2024 filing status became single. That same income measured against $109,000 placed her in IRMAA Tier 1. Her 2026 Part B premium is $284.10 a month instead of $202.90. That is $974.40 per year on income that did not change and a situation she had no control over. Death of a spouse is a qualifying event on Form SSA 44. Joyce files with his death certificate and a current income estimate. The surcharge ends. As you watch the rest of this video, hold one person in your mind, someone who recently retired, lost a spouse in the past 2 years, or received a Medicare premium increase without understanding what triggered it. By the time this ends, you will know exactly what to send them. Here is the exact language that opens the right process. And what happens when you use the wrong words first? Wrong exchange. You call Social Security. The agent answers. You say, "I think my Medicare premium might be too high." The agent opens a general inquiry. The surcharge continues running. Right exchange. You call 1-800-77-21213. The agent answers. You say, "I want to request Form SSA 44 to appeal my IRMAA surcharge based on a qualifying life-changing event. My income has decreased significantly since the year used to calculate my current surcharge." Those two sentences identify the correction pathway. The agent initiates the SSA 44 process. You complete the form, document the qualifying event, and submit your current income estimate. Processing typically runs 30 to 90 days. If approved, excess surcharges already deducted may be refunded retroactively. Defense line. If the agent questions whether your situation qualifies, say this clearly. Retirement is a qualifying life-changing event under current Social Security Administration policy. I am requesting a new income determination using Form SSA 44. That ends the debate. The SSA 44 has 3 steps. Step 1. Identify your qualifying event and the exact date it occurred. Step 2. Provide your adjusted gross income and tax-exempt interest for the qualifying year from your IRS Form 1040. Step 3. Estimate next year's income if it will be lower still. Required documentation, retirement letter, final pay stub, death certificate, or divorce decree. Download the form at ssa.gov or pick it up at your local SSA office. For people whose surcharge is driven by required minimum distributions rather than a qualifying life event, there is a separate tool. A qualified charitable distribution, a QCD, allows anyone age 70 and a half or older to transfer up to $111,000 annually directly from a traditional IRA to a qualifying charity. That amount satisfies your RMD requirement for the year, but is excluded from adjusted gross income entirely. It cannot appear in your MAGI and cannot trigger an IRMAA bracket. Redirect a $20,000 portion of your RMD through a QCD this year, and you lower your MAGI by $20,000. The number Medicare may reference 2 years from now. For a retiree near the $109,000 threshold, that single redirect can mean the difference between paying $0 in surcharges and paying $1,148 per year. One honest caveat that can save your 60-day appeal window. Form SSA 44 covers qualifying life events only. It does not cover voluntary income decisions, a Roth conversion you chose to execute, a stock sale you initiated, an IRA withdrawal you elected to take. Filing SSA 44 against a voluntary income event uses your appeal window and gets denied. If your surcharge came from a voluntary decision, the QCD strategy going forward is the right tool. If it came from retirement, widowhood, or divorce, SSA 44 is the right tool and the approval rate for those qualifying events is high. The 60-day window. From the date you receive your official IRMAA determination letter from SSA, you have 60 days to file a formal appeal. For life-changing event requests on Form SSA 44, the window is more flexible. You can file while still inside the affected benefit year, but every month you delay is another month the wrong premium runs against your Social Security check. The money paid in prior years before you knew this form existed is gone. No filing recovers premiums already collected. That is the honest part. What is not gone is this year's surcharge and every year after that. The form takes 20 minutes. Here is your action list. Download Form SSA 44 at ssa.gov. Gather your documentation: retirement letter, final pay stub, death certificate, or divorce decree. Call 1-800-772-1213 and say, "I want to request Form SSA 44 to appeal my IRMAA surcharge based on a qualifying life-changing event." If your surcharge comes from RMDs and you give to charity, contact your IRA custodian about directing up to $111,000 as a qualified charitable distribution before December 31st. Send this video to one person you know who retired in the past 2 years, recently lost a spouse, or has been paying a Medicare premium increase they never fully understood. That one share might return $974.40 to $5,844 per year to someone paying a surcharge, the SSA, calculated on income that no longer exists. And that was never going to stop until someone showed them the form. That is what this channel is here to do. Subscribe right now so this research keeps reaching you before the next surcharge year locks in. The next video covers another Medicare cost running automatically in the background with its own correction form and its own deadline. It is on screen right now. Watch it. If this reached you at the right moment, share it so it reaches someone else before their appeal window closes. Comment the word "appeal" below. I read everyone.